Welcome to Matty B's Mortgage Monday Update. We're going to be doing these every Monday, and we are going to pick a topic relevant to the current time. So look out for these each week on Monday, and we are going to keep it short and concise and break down what's going on in the housing market and the mortgage rate environment continuously week after week, so you don't have to go anywhere to stay up to date. And there is no better topic than existing home sales now that the year of 2022 is done. So existing home sales shrunk for the 11th straight consecutive month. But is this really a surprise? For all of 2022, home sales declined about 17.8% compared to 2021. 2021, keep in mind, was a gangbusters year, a large volume year of transactions. But soon into 2022, the rapidly increasing interest rate environment weighed heavily on the residential mortgage industry in the transaction area, which is different than the price area. And so rapidly increasing interest rates along with low inventory are the main contributors to having lower existing home sales. And existing home sales account for approximately 90% of the market. New construction only accounts for approximately 10%. So I'm going to give you some breakdowns on prices in the Midwest and the South, because that's where I operate in. So the Midwest existing home sales slipped by 1% in the month of December, but they were down 30% year over year from 22 to 21. Yet the median home price still rose by 2.9%. The South home sales slipped by 2.2% and were down 33% compared to 2021 in the year 2022. Yet the median home price in the South increased by 3.5% a year earlier. Why is this? Ironically, very similar to why the transaction count or existing home sales is falling for 11 consecutive straight months. Because interest rates were so low before and they stopped subsidizing those and they increased so rapidly that you have a lock-in effect. So the existing homeowners with a extremely low rate compared to today are incentivized to stay put. Builders building the new housing coming to the market are still behind as they read the interest rate environment as unfavorable. So they have stopped starting as many homes as well. And there is a demographic and household formation backlog that has a shortage in housing, period. There's only about 750 existing homes for sale, excluding the ones that are already under contract. So another interesting statistic is the first-time home buyer is back in the marketplace. And this should not actually be a surprise because they had an extremely difficult time competing in the year 2021, 2020, and some of 2022. And so in the month of December, there was a 3-point increase in the percentage of people buying homes that were first-time home buyers. Those buyers were responsible for 26% of sales last year, which is actually the lowest reading in the National Association of Realtors history. And it totally makes sense based on the extreme demand in those years, along with the extreme amounts of competition and the low inventory. So those people are back participating in the marketplace. And one of the reasons is because they can now win and they can now take their time, or at least relative to last year, in order to go into the marketplace, get educated, get pre-approved, and not compete against cash or appraisal gaps or things of that nature. Now, going forward, is that going to be the same scenario for these first-time home buyers? Time will tell. December home sales already came in better than expected. And the NAR chief economist Lawrence Young indicates that he does expect transactions to pick up as soon as interest rates become markedly lower. Well, we believe they'll become markedly lower by midsummer. And so that could lead to a more competitive market because signs of inventory being adequate should the interest rate environment go down. It looks like we will still have a shortage of inventory. Some of those locked-in buyers, some of those locked-in homeowners with lower interest rates may decide to do their move-up, trade, lateral moves, and that should stimulate some transactions. But the question I have for you is, if you plan to participate in the marketplace, why not now? if there's a legitimate reason as to why not now, are you prepared to compete in the marketplace if the interest rates go lower, which is great for everybody, but it might mean that you have to compete against more people? I would really encourage you to reach out to me. I am with New American Funding, and I believe we have the most tools in our toolbox, which is a one-time close new construction. If there's not inventory in the marketplace, you can build it yourself, and you do not have to take out a construction loan with us. We also have a cash buyer program. So if you need a loan, we will pre-approve you, underwrite you, and we will purchase that house in cash on your behalf and transfer the title to you when that loan closes. You do not need to use any of our tools other than a standard loan, but we have all of them, including down payment assistance for the first-time homebuyer if down payment is a hurdle. So I would encourage you to reach out to me and make sure you're working with a professional at a lender that has all the tools in the toolbox, so you are prepared to compete and win in any environment when you find that right home for you and your family. Thank you very much and have a good day.